$200,000 might sound like a lot of money to most people, but when you think about it in the context of wealth building, it's actually just the beginning of something much bigger. Many people get stuck at the $200,000 mark and think that they've hit the ceiling of their financial success. But the truth is, $200,000 isn't the destination. It's only halfway to $1 million. And if you play your cards right, it can set you up for far more than that. When we think about money, we often focus on the immediate, the tangible. We look at what we can buy right now, the trips we can take, the houses we can own. And while all of those things are great, there's a deeper, longer-term strategy to consider. $200,000 isn't just a number. It's a tool, a stepping stone, and a mindset. Think about it. If you have $200,000, you're already in a better financial position than many people. But $200,000 alone isn't going to make you wealthy unless you put it to work for you. If you invest it wisely, that money can grow exponentially. In the world of investing, there's something powerful about getting your money to work while you sleep. For example, if you invested that $200,000 in stocks, mutual funds, or other assets that appreciate over time, you could see that initial amount double, triple, or even more. Of course, the key is making smart investments, staying informed, and being patient. But just think, $200,000 is already a huge chunk toward that $1 million goal. And with the right mindset and strategy, it's possible to reach $1 million faster than you might think. One of the most important things to realize is that $200,000 isn't just about how much you make in one go. It's about compounding over time. It's about setting up a system where your money is not sitting idle, but working for you. The idea of compound interest is one of the most powerful financial concepts. It's like planting a tree. Initially, the tree doesn't seem to grow much, but over time, it starts to spread, and its branches multiply. That's exactly what happens with money when you invest it wisely. Let's say you invest that $200,000 in the stock market. Historically, the average annual return on stocks has been around 7% after inflation. That's not bad at all. Over time, 7% doesn't sound like much, but when compounded, it turns into something incredible. Your $200,000 could grow to $400,000 in just a little over 10 years, and then $800,000 after 20 years. And before you know it, you're closing in on that $1 million target. And if you're smart and reinvest your earnings, you might even reach it even faster. But here's the kicker. You don't have to do it all yourself. You don't have to know every little detail about the stock market or even have a deep understanding of finance. What's more important is that you set yourself up for growth. And to do that, you need to think long-term.
If you can get into the habit of making your money work for you, even in small ways, you'll be well on your way to reaching that $1 million goal. Another way to think about $200,000 is that it can help you build a foundation for future income streams. For example, if you invest in real estate, you could buy a rental property. If you do it right, the rental income could help pay off the property, and eventually, you could sell it for a profit. With $200,000, you're in a good position to buy a house or an apartment in many markets, and if you can manage it well, that could lead to additional income streams that help you get closer to $1 million. The real trick is understanding the value of leverage. Leverage means using something small to control something much larger. In real estate, this could mean buying a property with a small down payment, but the value of the property is much larger. The same principle applies in business and investing. If you can leverage your $200,000 into larger investments, that's where the magic happens. When you understand that $200,000 is just a stepping stone, your entire perspective on money changes. It's not the end goal, but a key to opening the door to much larger opportunities. The important thing to remember is that wealth isn't built overnight. It's about making smart choices, playing the long game, and giving your money the opportunity to grow over time. This is why it's so important to have a financial plan. It's easy to get caught up in short-term thinking, to think that the $200,000 is all you'll ever need. But in reality, it's just a piece of the puzzle. The key to reaching $1 million is understanding how that $200,000 can work for you over time. One of the best ways to ensure that your money grows is by diversifying your investments. Having $200,000 in a single asset isn't as wise as spreading that money across multiple areas. Diversifying means putting your money in different investments like stocks, real estate, bonds, or even starting a business. This way, even if one area of your portfolio takes a hit, you'll have other assets to fall back on. $200,000 is also a good buffer against the unknown. Life happens, and it's important to be prepared for emergencies. Having a cushion of savings or investments means that you won't be left scrambling if something unexpected comes up. It's not just about making money, it's about protecting what you've built. And if you're thinking that $200,000 is just too small to get anywhere, think again. In the world of finance, the key to wealth isn't about hitting a huge jackpot. It's about making incremental progress, making smart decisions, and letting time and compound interest do the heavy lifting. If you can manage your $200,000 wisely, you're already on your way to the next big milestone.
In the end, $200,000 isn't what it seems. It's already halfway to $1 million. When you break it down, $200,000 is a powerful starting point, a seed that, if nurtured properly, can grow into a much larger financial tree. The reason it's only halfway to $1 million isn't just because of its raw numerical value, but because of the opportunities it opens up and the potential it holds when invested correctly. With the right strategy, mindset, and patience, you can turn that amount into something much greater, perhaps even something that will far exceed $1 million in the future. Too often, we see money as a static, finite resource, something to spend or accumulate. But wealth building is much more dynamic. It's about understanding that money is not just for immediate gratification. It's for setting yourself up for a future that could be filled with limitless possibilities. The way forward isn't to hoard that $200,000 in a savings account, waiting for a miracle, but to let it work for you, through smart investments, strategic decisions, and a long-term view. The power of money doesn't lie in its immediate usage, but in its potential for growth. You need to think long-term, stay consistent, and let your money grow over time. The world of investing, whether it's in stocks, real estate, or business, is all about compounding. With each year that passes, your initial investment can grow exponentially. This is why patience is crucial. The magic happens when you give your money the time it needs to flourish. You won't see massive returns overnight, but as the years roll by, those small wins compound and build on one another, creating something far bigger than you could ever imagine from a single initial sum. With the right strategy, you can diversify your $200,000 into different income-generating assets that work in parallel to each other. Maybe part of it goes into real estate, part into stocks, and another portion into a small business venture. By diversifying, you're creating multiple streams of income that help you build a solid foundation for further wealth. This approach allows you to mitigate risk while still maximizing potential returns. And as your portfolio grows, your ability to take on larger and more rewarding opportunities increases as well.